become difficult for people to achieve. Consequently, the inflation was increasing, which basically is another word for things were becoming expensive. So when things were becoming expensive, the Feds had to come in and they had to curb the interest, curb the accessibility of that money in order to lower inflation. And how did they do that? One of the toolkits they have, or one of the tools they have in their toolkit, is a control over interest rates.
Interest rates.
So what they started doing was they said, okay, we're going to increase interest rates.
Wow.
While the interest rates had increased in the past, what happened this time was that they grew at the fastest rate in the history.
Yeah.
Okay. So as they grew at the fastest rate in history, or in essence, as they grew, what happened was the debt started to become more expensive. As the debt started to become more expensive, Fed started to achieve what they had hoped. So somewhere in July, where the inflation had peaked to 9.1%, it was just a third or fourth hike of interest rate. Notice the inflation rate started to go down.
Yeah.
This is exactly what they wanted to do. So interest rates started to go down. And as the interest rates started to go down, it also spooked, as the inflation rate started to go down, the interest rate continued to increase. As the interest rate continued to increase, that also started to spook the stock market. And as the interest rate started to increase in the beginning, the stock market started to go down. You notice here?
Yeah.
But around this time, something else happened. Around this time, the quarterly earning reports of the company started to come out. And also by this time, the ambiguity in the minds of investors went away, where they realized that inflation has now started to become curbed, which means inflation is starting to go down. And they knew that interest rates will increase, but they will stop increasing because the FOMC had started to give their indications. And I'm also going to talk about FOMC in the next little while. So when the retail investors start to get an idea that they know what's going to happen, so there's no longer that ambiguity, look what happened to the market. The stock market stopped going down and started to recover after that. Right?
Nice. Okay.
It continued to recover even though interest rates were increasing. Why? Because the ambiguity had gone away from the market. They knew what was happening. And the earnings that were coming out of the company's quarterly earning reports were
stronger.
Good.
They were good. Yeah, Anji.
And the goal of the Feds was to lower the inflation.
Yeah.
Now, while I understand, even till today, the inflation has not gone down to 2%. In October 2022, since October 2022, the market went up by 51%.
Wow.
Okay. Now the question is, did the stock market go up solely because of reduction in inflation? Maybe. We know that the stock market performs better when the intrinsic value of the stock prices increases, which only happens when the profitability increases. Intrinsic value, Vinney and Farouk, is another word for fair market value of a stock. In the long run, the stocks always reach the intrinsic value, the fair market value. In the short term, the stock market is emotional. So we know that the higher interest rates lower the profitability, right? So as interest rates increase, which here, interest rate is increasing, it is supposed to reduce the profitability of the company because the debt is expensive.
Yeah, debt is there. Absolutely.
So when the debt is expensive, why did the stock market why did the stocks of some companies still continue going up? Or why did the stock market continue going up even though the interest rates were increasing?